Opendoor's story has been dominated lately by stock price swings, short pressure, and retail sentiment. But if you zoom out for a moment, there's a much bigger narrative playing out, one that doesn't rely on daily candles or after-hours trades. It's the housing market itself. And if recent data is any indication, the backdrop for Opendoor's business may be stronger than many realize. Today, I want to talk about why August's housing numbers matter, how they tie into Opendoor's guidance, and why this could set up the company to outperform expectations in the months ahead. Let's start with the macro. The U.S. Census Bureau reported that new home sales in August came in stronger than expected. That's important because housing is one of the most interest rate-sensitive sectors in the entire economy. With the Federal Reserve signaling that rate cuts are coming, possibly as early as later this year, investors are already watching for any signs of demand resilience. And what the August numbers showed is that demand hasn't collapsed the way many feared. In fact, it's holding up better than expected. Now, why does this matter for Opendoor? Because this company lives and dies by transaction volume. Every home it buys, sells, and facilitates is part of the engine that drives revenue. When activity slows, so does Opendoor's top line. When activity picks up, Opendoor benefits disproportionately because of the scale and efficiency of its platform. This is where the context of the last earnings call is so important. Remember, it wasn't Kaz Nejatian delivering guidance last quarter. It was the old board. And they were cautious. They warned of softer activity in Q3 and Q4. They wanted to set expectations low, possibly to avoid another credibility hit. But here's the thing, if housing demand is already coming in stronger than expected, then those conservative projections might already be wrong. And that means Q3 and especially Q4 could look much better than anticipated. For investors, this is a classic setup. You've got a management team that set the bar low, and you've got macro data suggesting the bar may be easier to clear. That creates the potential for upside surprises. And in a growth stock like Opendoor, upside surprises are exactly what can reignite investor enthusiasm and expand multiples. But it's not just about demand. It's also about supply. One of the defining features of this housing cycle has been the limited inventory of homes available for sale. People who locked in mortgages at 3% or less don't want to give those up to move into a new mortgage at 7%. That lock-in effect has kept supply tight, and that's part of why home prices have held up so well. For Opendoor, limited supply creates a mixed picture. On one hand, fewer sellers mean fewer homes available to buy. But on the other hand, it also means that when Opendoor can offer speed and certainty to sellers who must move, whether because of job changes, life events, or personal needs, its value proposition becomes even stronger. Add to that the resilience of new home construction. Builders have been more aggressive about offering incentives, rate buydowns, and other perks to move inventory. That creates opportunities for Opendoor to partner or to take advantage of pockets of activity that aren't constrained by existing mortgage rates. And if the housing market overall is showing life, then the opportunities only expand. So what we're looking at is a setup where housing macro data may be creating a tailwind at exactly the right time. And this is where it ties back to the internal reset under Kaz. Opendoor is already rolling out new products. Kaz has hinted at buyer-side innovations, including things like the ability to return a home if you don't like it. He's restructuring the workforce by bringing employees back into the office, pushing for accountability, and rolling out internal AI tools to make the organization more efficient. He's cut external PR firms, opting to speak directly to investors. And he's accelerated the national rollout of Opendoor services, shrinking timelines from weeks away to happening now. All of that is happening just as macro conditions start to improve. That's not a coincidence, that's momentum. Because the reality is, you can have the best product in the world, but if the macro environment is against you, it's an uphill battle. Conversely, if you're resetting the company internally at the same time that external conditions are getting better, the tailwinds amplify your strategy. This is what I think investors need to pay close attention to. It's easy to get caught up in whether the stock is at $7 or $8 today. But the real question is the housing market getting stronger, and is Opendoor better positioned to take advantage of that strength than it was 3 months ago? The answer to both of those looks increasingly like yes. Now, let's talk specifically about the guidance issue. The old board said activity would be lower over the next 2 quarters. That guidance is still technically in place. But the reality on the ground is already starting to shift. If Q3 comes in better than expected, that's one data point. If Q4 comes in stronger, particularly because that's a quarter where seasonality often kicks in for housing. Then suddenly the narrative shifts from Opendoor is struggling to Opendoor is outperforming. And when that kind of narrative shift happens, the market takes notice. And remember, Opendoor doesn't have to blow the roof off the numbers to change sentiment. It just has to do better than expected. With expectations already low, the bar to clear is not that high. And that's the beauty of this setup. Of course, there are risks. The housing market is still highly sensitive to interest rates. If the Fed signaling changes, if inflation ticks back up, or if consumer confidence takes a hit, demand could falter again. But right now, the data is showing resilience. And with the Fed leaning toward cuts rather than hikes, the macro backdrop looks more supportive than it has in some time. So what does this mean for Opendoor's long-term story? It means that the growth narrative is not broken. It means that the combination of external housing demand and internal resets could produce results that beat the market's expectations. It means that shorts who are betting on a collapse may have misjudged the timing. And it means that for investors who believe in the mission, to tilt the world in favor of homeowners rather than renters, there's real reason to hold conviction. Because at the end of the day, Opendoor isn't just a trade. It's a transformation story. It's a company in the middle of rewriting its own DNA, moving from a cautious, consultant-heavy organization to a fast-moving, AI-driven disruptor. And if the housing market provides a tailwind, then the internal reset becomes even more powerful. Think about the alignment here. Housing demand holds up, Opendoor's volumes improve, better than expected earnings follow, investor confidence rebuilds. At the same time, Kaz is cutting fat, boosting efficiency, and rolling out new products. That's a 1-2 punch. And it's the kind of alignment that can turn a stock from beaten down to a comeback story. So as we look at the housing data and the broader macro picture, the key takeaway is this: Opendoor may be set up to surprise to the upside. The August numbers are just the start. If that trend continues into Q4, it could be the catalyst that reorients the entire narrative. And for shareholders, that's the bigger story to watch, not the day-to-day swings, but the intersection of macro tailwinds and internal transformation. This is why I keep coming back to the idea that you have to wear the long days if you're long the stock. Volatility is part of the journey. But when you step back, what you see is a company with leadership, momentum, and a macro environment that's slowly but surely turning in its favor. So the next time someone asks you why you're holding through the noise, here's your answer. Because housing demand is stronger than expected. Because the bar for earnings is low and ripe to be beaten. Because the company is executing a reset at exactly the right time. And because when all of that comes together, you've got the setup for a growth story that's bigger than any one trading session. That's the real narrative. That's the real opportunity. And that's why Opendoor's future may be brighter than the bears are willing to admit.